Thank you so much for joining us today. We're so happy to have Nerida Conisbee with us. Nerida is the Chief Economist for Ray White, and she's here to talk some sense into the market for us. There's a lot happening out there, Nerida. Thanks for being on board with us today.
Thanks for having me. It's a pleasure to speak to you, Avi.
So we entered the pandemic and there was all sorts of predictions, right? The market's going to crash, the interest rate's going to go up, then it's going to go down, people are not going to buy, people are going to be out of jobs. But we've seen the total opposite. What's happened last year in the real estate market?
Yeah, look, we certainly saw the total opposite. When you have a look at the early predictions, one that got the most airtime was a 30% decline in house prices. And if we have a look between then and now, they've actually moved in exactly the opposite direction. So we have seen a 30% increase. I guess the thing is you do need to be careful with predictions, and one of the things is that most people get the direction right. They generally know whether it's going up or down, but really the amount is the problem. So I think that's the first lesson. The second lesson, though, is looking back at what happened in the pandemic, and a lot of it had to do with the fact that stimulus came in very quickly, and certainly what we saw through the Ray White network is that once that stimulus came through, the level of consumer interest in property started to increase again. So I think people felt a little bit more comfortable. The other issue too was that the people that were hit hardest by the pandemic in terms of job loss were renters, and we did see sharp drops in rents, certainly in 2020. But then fundamentally what drove pricing was that interest rates went to a record low, people saved a lot, we weren't spending much money, and then finance was also quite easy to get. So all of these things combined to really drive up pricing, so much so that in some places we saw rises of several $100,000 reaching up to $1 million increases.
So let's talk about momentum. Because have we ever experienced this type of momentum in the market? I mean, the market's grown, the size of the market's grown, the prices have grown, but the growth period seems to have lasted for so long. Is this the best prosperity we've ever seen in the market? And why has the momentum lasted so long?
Yeah, it is the best momentum we've seen, and especially when we have a look at the level of increase that we saw, and also the degree of consistency across Australia. I mean, in pretty much every market we saw a price increase, and that is whether you're in an outer suburban area, if you're in a city area, if you're in a regional area. In terms of the momentum, again, when we look at the drivers, a lot of it was to do with finance. But when we have a look at southeast Queensland, the other driver was the fact that there was a lot of people moving up here. So people, money, shifting up to southeast Queensland. A lot from Melbourne, that was a really key trend, but also from Sydney. So even though international borders were shut, we were continuing to see pretty strong population growth through the southeast Queensland market.
So Queensland won on net migration.
Yes.
But who are our buyers at the moment? Are they still first homeowners? Are it mums and dads, are it investors? What have we seen? What's the trend we've seen over the last 12 months? Has that changed a lot, or are we seeing the same buyers entering the market?
Yeah, well, it was interesting early on in the pandemic because it was first home buyers, and we know first home buyers, they love a slow market. They love the time to make decisions. They love stimulus, and government stimulus in particular, and we saw a lot of that. So Home Builder was a particularly well accepted program for them. So for 2020, that's what we saw. We saw lots of first home buyers, and then as the market got very, very hot, towards the end of 2020, that's when we start to see investors come back in. And we do have this issue with first home buyers and investors in that they are highly competitive. And typically what we'll see, if we see lots of first home buyers, we don't see many investors. If investors are back in, we don't see many first home buyers. So there was a very noticeable shift in those two groups. There was a few other interesting trends. We saw a lot of demand for holiday homes. So a lot of people, obviously not able to travel, were looking for holiday homes. A lot of beachside regional areas did well. We saw a lot of demand from upgraders. And so people taking advantage, again, of very low interest rates, taking advantage of, readily available finance. And then the final trend was a lot around renovation activity. So the same way that we saw this record increase in pricing, we've also seen record planning applications for redevelopments of homes, renovations of homes. So it's been such a fascinating time for the property industry since the start of the pandemic.
I wanted to touch on price growth because there's a few things that you've said in there. Do you think it's the demand, the competition from all the buyers that are driving price growth? And is that why we've seen so many auctions in the marketplace? Because sellers have realised that's the best way to sell property, because you've got first home buyers on one hand, you've got investors on the other, and they're competing for the same product, and there's not as many sales or listings around because they're transacting so much.
Well, that was a challenge last year, too few properties on market, and a lot of it was driven by these rolling lockdowns. So Brisbane didn't see as many lockdowns as, say, Melbourne. Melbourne was the extreme, but then at the same time, there was certainly a lot of buyers coming from Sydney and Melbourne, which did impact transaction volumes in Queensland. As we start the year, what is quite interesting is that we are seeing quite a lot of stock enter the market, and that will slow things down a little bit. We know the buyers are still interested, interest rates are still low. Some buyers are a little bit cautious now. There's a lot of talk about interest rate rises and restrictions to finance. But fundamentally, more properties to market, it does create more competition for sellers. But, as you said, going to auction really is the best strategy because it does create that higher level of competition and excitement around a property.
Now, development applications, I'm excited to talk about this with you because you touched on that. Do you think that the impact, that what's happening in the building industry in terms of shortage of land, shortage of building materials, how is that translated to the prices? How is that translated to more established home selling and more planning developments applications coming in? What have you seen in the market as a result of what's happening in the building sector?
Yeah, look, the building sector is going through a lot of challenges at the moment. So on one hand, there's a lot of demand for their services. So home builder has led to a big a lot of construction activity taking place. But again, going back to renovation activity, we also have seen a lot happening there. So for the construction sector, there's a few problems. The first is around supply of building materials. So we've got a lot of supply problems trying to get stuff out of, through to Australia from overseas. We also had bushfires at the start of 2020, which wiped out a lot of timber locations. So that's pushed up the price of timber. And then getting people, it's really hard to get staff at the moment across all industries. And until we get international migration coming back, it's going to be a challenge. So I think if you are building, I think one of the things you really have to realise is that costs are going up quite significantly. Ideally, though, by the end of the year, a lot of these supply chain issues, a lot of these staffing issues will hopefully be resolved.
I wanted to touch on growth in Sydney, Melbourne and Brisbane. Now, what we've found in the Brisbane market is when there's growth in Sydney, it's delayed to come to Brisbane. So there's a 3-month, 6-month lag. At the moment, in our markets, we're not seeing the lag. What's your experience out there in terms of growth between different markets, different states?
Yeah, look, Melbourne and Sydney sentiment has definitely switched. So we're not really seeing it show up all that much in the data as yet. But when you talk to people on the ground, there's a lot of, I guess, nervousness about what this year holds. A lot of it is around the talk about an interest rate increase. So that's unlikely this year, but it'll probably, obviously will come at some point. And so people are a little bit anxious about what that means to pricing. In southeast Queensland, we are seeing quite different conditions still. So the big thing for southeast Queensland is, of course, all that population movement up from Melbourne and Sydney. That's been a big factor. There's the Olympics. There's just a high level of positivity that's taking place. A lot of jobs growth, that's helping as well. So I think this year, if we do see a stabilisation in pricing, it will be Melbourne and Sydney first. At the moment, Brisbane, Gold Coast, Sunshine Coast does still seem to have quite a lot of momentum. So if it does slow down, it will be quite a bit later than what we're seeing in Melbourne and Sydney.
I wanted to talk to you a bit about the Olympics. I'm glad you brought that up because there's two schools of thought. We've gone through the Commonwealth Games in the Gold Coast. The market, the growth, we didn't see what was predicted. Now, in your experience, in what happened in Sydney with the Olympics in 2000, is it hype? Is Brisbane going to be growing as a result? What's going to happen? Because a lot of people say, hey, look, I'm going to hold out selling till the Olympics, or I'm going to invest in Queensland because of the Olympics. What's actually going to transpire? What are you seeing out there? What are your thoughts on this matter?
Yeah, there is so much research about the impact of Olympic Games on economies, and some studies show it's not great, some studies show it's amazing, some show it's amazing on the way up to the Olympics, not so great on the way out. So it's really hard to have a definitive view. I think, though, on the positive side, the infrastructure investment is such a key part that if you have a lot of money pumping into roads, public transport, transport, stadiums. That's going to have a really positive impact on the market. The other issue is around positivity, and I think for Brisbane, the announcement came at a really good time. Southeast Queensland was attracting a lot of people. You guys didn't go through the same level of lockdown as the rest of Australia, so your economy has gotten through this a lot better. Yeah. And then at the Olympics, it's like, well, here we are, we're winning here in Southeast Queensland, and so that positivity really flows through. It also flows through for people who are looking to buy from southern states or looking to move here, because again, people want to live in a place that's positive and there's a lot happening, and that certainly feels the case in Brisbane at the moment.
Why do the investors in the southern states prefer investing in Queensland as opposed to, say, Western Australia or Tasmania? I mean, I know it's a very heated discussion, but on the ground we feel like our investors are all Sydney and Melbourne based. Why is there affinity towards Queensland? I think you have touched on it a bit, but there seems to be a growing swell of numbers from interstate wanting to invest here.
Yeah, there is a lot of investors here at the moment. It's quite similar in Hobart, actually, but Hobart's a very tiny market, so it's very hard to get in. It's also become quite expensive, so that's moderated activity a little bit. I think though with Southeast Queensland, which is quite different to Hobart, is that people want to move to Southeast Queensland. So there's lots of jobs, which Hobart doesn't have. So you've got the double whammy, I guess, of people wanting to invest their money somewhere. Queensland's got a lot of positivity. You've got people who are wanting to move there, so there's rental demand, so that's a key positive. And then you've also got people who are wanting to buy holiday homes, so that drives things as well. So there's just a lot happening in Queensland, and I think that just flows through to lots of different types of buyers, which is why we're seeing such a flow of activity and money coming up. There's one more factor, which I will mention, is around pricing. And one of the things we find when people from Sydney and Melbourne go into regional areas or they go into cheaper markets is that the way they look at property values is very different because they compare to their local markets. So then when you start to see a lot of these buyers, it resets values, almost not to the same extent as their local markets, but more so than a Brisbane buyer who, not surprisingly, looks historically to look at what the value of a property is.
For someone coming from a $1.4 million Sydney market, the $600,000 market in Brisbane would seem relatively cheap and good value.
Bargain. And to give you a really good example, Blacktown in Sydney, it's the highest crime suburb in Sydney. It sits at $1 million. So, Blacktown, which, has things going for it, obviously, but it's pretty rough. Sitting at a $1 million price point. Come to Brisbane, if you've got $1 million, you can live in a really safe, family-friendly suburb with really great amenity.
So there's great value in the state. Which have you seen any patterns in Brisbane and southern Queensland as a region? Which areas are performing a bit better than the others? And is there a reason why that's occurring?
Yeah, it's interesting. I mean, it's pretty close. When we have a look at the price growth that's occurred from the start of the pandemic to now, they're all sort of hovering, the different regions are all sort of hovering around 30-40% in terms of price increases. In terms of the order, it basically goes Sunshine Coast, Gold Coast, then Brisbane, but there's not a lot in it. There's not enough to say, well, Sunshine Coast is a complete overperformer. There's been high demand for just such a range of properties. So I think, that's been a key factor, that you've had demand, for holiday homes, first home buyers, investors, families, upgraders, and, so that's created lots of demand for different parts of Brisbane. The other bit that isn't going so well in other states, particularly Sydney, Melbourne, is the unit market. And what's quite different with the Brisbane unit market is that it hasn't seen a lot of development leading up to the pandemic in the same way Melbourne and Sydney did. So as a result, we haven't really seen much negativity amongst the unit market in the same way that we saw, particularly in 2020 in Melbourne and Sydney.
I wanted to touch on commercial sector a bit.
Yeah.
Do you feel that investors who are priced out of the residential market are looking at other investment choices? Is that driving the growth in commercial? What is actually driving the growth in commercial demand at the moment, especially in Southeast Queensland?
Yeah, look, it's commercial property is doing well because the same reasons residential is doing well. There's a lot of money, interest rates are low, there's a lot of positivity. The thing with commercial property, though, it does depend on the commercial property type, and we're certainly seeing quite different conditions depending on what commercial property type you're looking at. As at the most extreme example, you have somewhere like a city office building. A lot of them are quite vacant at the moment. not affecting values so much, but certainly affecting rental
returns,
levels.
yeah.
But then you go to suburban areas, and with people working from home, you've got strip retail, which is doing really well in many places because people are home more and they're not going to work and spending money in the city, they're spending money locally. So it's highly variable as to which sort of commercial property type you're looking at.
And do you find there's more commercial property transacting, or the numbers are the same? It's just the values have gone up?
No, there is volume. We can see it. We saw it last year with resi. We've seen it with commercial. So I think there's people who are taking the opportunity. Perhaps now seeing as the top of the market and time to maybe get out, or time to upgrade, or time to diversify. But there's certainly a lot of money out there, and also what is quite interesting with commercial money is there are a lot of commercial properties. There's also a lot of international money that comes in as well. So it is a market that does see a flow of funds from not just private investors, but a lot of institutional investors as well.
Perfect. So where are we going this year? Again, getting back to predictions. There's talk of interest rate changes. There's talk of APRA changes. The Omicron variant is affecting us more than, say, the Delta variant. So where do you see the next 10 months, 11 months this year going for us in both commercial and the residential property sector? I know that's a very long-winded question, but it's
coming back to predictions.
There's so much happening, right? Everyone wants to know, shall I sell now? Shall I wait? Shall I buy now? Shall I stay a renter? But what do you see out there, and what do you think is going to happen in our Southeast Queensland, especially Brisbane market?
Yeah, look, it's an interesting question. I mean, you sort of touched on two things. I guess the first one being, what's the direction of the market, and then what you should do with the market. So maybe I'll tackle both.
Sure.
So in terms of the direction of the market, it is likely that price growth won't be as strong this year as we saw last year. So you mentioned a lot of risks in the market. APRA coming in late last year doesn't seem to have done much, but if they come in again and put further restrictions, that will slow things down. If we start to see an interest rate increase, that we know for sure, given how sensitive property is to interest rates, that could potentially slow things down. So, I don't see, for Brisbane, I don't see any price decline on the horizon, but certainly slightly slower conditions in the market. In terms of what you should do as a different buyer or seller, I guess it fundamentally does depend on your personal circumstances. My general advice for first home buyers is just get in. And no time is a bad time if you find the right property. Always stay within your budget, because there's nothing worse than not being able to pay bills. So as a first home buyer, move now. If you're looking to invest, South East Queensland has a lot of positivity. It's a stable market. It's going to give you good rental returns this year, and we think that with international migration starting up, rents will continue to increase. So that makes it pretty positive. And then upgrading makes sense at any time. I guess in terms of when you do it, the main impact will be the speed at which you have to move. So in a very fast moving market, upgrading, you need to be quick. You need to sell and buy very quickly. If you're wanting to upgrade in a slower market, it gives you a bit more time. So you can sell and you can wait a little bit longer to buy.
Awesome. Well, thank you for your time today. That's some great insights for our viewers today. And thanks for coming down to Brisbane to have a chat with us, and all the best today.
Thanks for having me.